Let's assume, as of the low bar in this chart, that we believe, this is the stock of Tesla, by the way, it's the daily data. We believe that Tesla is in a position to have another strong bull trend to new highs. Now, we don't know if that's for sure. We're not forecasting it. But let's just say, given the higher time frame data, the other technical positions of the market, the pattern position going into this low, that we believe that that completed a correction and we're going to continue a bull trend, and we should have another bullish sequence to new highs, to new extremes. So let's follow along once again, bar by bar, to see how we confirm or invalidate that idea. As of the last bar in the chart, we've had a section up, so about 5 or 6 days, and then kind of a steep correction here. This is only a couple days. So let's just say this is a potential one, and I'm not going to put the question marks on it right now, and we're making it 2. But, of course, they're questionable. They haven't been confirmed by any means. But let's add some data. And what can the market do to indicate that we've completed this section, we've completed a correction, and then we're making another section up to a new high? Well, of course, just take out the swing high. So let's add some data. And, of course, I should have said by declining below the beginning of this first section up, that would, of course, void it as a 1 and this as a 2, because a wave 2 can't trade beyond the beginning of the wave 1. Okay, here's the last data on the chart. And not a really bullish day. We certainly traded above this wave 1 high, but then we came down and closed in the lower half of the day, kind of the lower 1/3 of the day. So we didn't close above this high. Maybe we closed above the closing high. I guess the point is that I'd like to see another day where we get above that high before we even consider that we're in a bull trend. Well, there we go. Now we've cleared this high for sure, and we can say this is a probable 1, probable 2. We're probably in wave 3 here. So before we continue and add more bars, is this the corrective low, or is this the corrective low? If we look at the close-only data, the closes here are actually lower than the close back here. So what I usually do, when it looks like we've got just one volatile kind of bar that made an extreme and came back, in fact, even on this day, it didn't close near the low, it closed in the upper part of the range, and then we're sideways for another 4 or 5 days, I'm probably going to be looking at the corrective low. The end of the correction is a better way to put it, not necessarily the corrective low, but the end of the correction on the final bar before a resumption of the trend. And once again, we'll get into more of this when we do subdivisions. Right now, I want you to just kind of think logically. So it looks like we had a section up, then we're down to sideways before we began the next section up. So section up, correction, continued section up. And again, I frequently look at closes when I've got some volatile day that really doesn't fit in with what's going on. Maybe that was a news day or something along those lines. But here's the end of this correction. So let's add some more data. What are we looking for? We've had a significant advance compared to this advance, so I would say we can pretty much confirm that we've completed a 1 or 2, and this is indeed a wave 3. If we're going to consider it a wave 3, what should the market not do? Well, we always want to identify that, and it should not close below the closing high of the wave 1. So we always put that in automatically. So the other thing we're going to be looking at is if this is a 1, if this is a 2, we're going to be looking for a correction greater in time and our price than with this wave 2 correction. Now, we're getting to significantly higher price levels, So the first thing we're going to look at is a correction greater in time. So in this case, 1, 2, 3, 4 or 5 days. Let's just say 5 days. There we go. So our correction, what we got labeled a wave 2, is like 5 trading days, around 10%. Depends on which low that we use here, but close enough. So we're looking at around 10%. The reason I'm looking at percentage here is the higher we get. This correction was $48, but as we get in higher levels, a $48 correction is going to be a very small percentage amount. So frequently, for the more major moves, I look at percentage change as opposed to the actual range of the price. So we'll talk about that more when we see other examples as we go through the course. But for now, we're looking for at least a 5-day correction. And if we get around a 5-day correction, then that should be of the same degree as this correction, meaning a wave 4. So let's just keep adding data and think about what's going on here. Boy, what we call this is a big outside bear reversal day. It's actually what we call a 2-close reversal. In one day, it made a new high, then came down and closed below the closes of the last 2 closes. Are we beginning, have we completed a wave 3 high? Are we beginning a wave 4? We don't know yet. We got to add more data. So we just had a 2-day decline. Very minimal decline. Lesser degree than this, so more than likely it's just a minor correction within this advance. It's not the quote-unquote wave 4 that we're looking for. There again we go. And a 2-day decline. So again, boy, in time-wise, it's not of the same degree as what I got labeled as a wave 2, another 2-day decline. These are just little small 2-day declines. Boy, this market, Tesla is on a tear during this time period. We'll add some more data. Oh, here we go. So as of the last bar on the chart, we've had the advance off of this low where it went to the new high, probable 1, probable 2. We've just had these little 1- and 2-day declines, corrections. And so they're not of the same degree as this 5-day. We can either just kind of look at the chart and go 1, 2. These are of a different degree. These are just little minor corrections within this section up from the wave 2 until we get to this point in time. And we've been sideways for 6 or 7 days, it looks like. So I'm going to consider that this is probably a 3, and we're probably making a wave 4 correction. Now, you'll learn a lot more about corrections in the next module. However, this is what we probably call A, B, C, D, E, something along those. It's a contracting triangle. There's a lot of names that have been given to it, whether you're looking at it from an Elliott wave standpoint or a traditional charting standpoint. But the point is, it's higher degree than any of these, and it's similar to what we got labeled a wave 2. Probably make it a 3 and a 4. Let me just add some more data. As of the last bar in the chart, we've gone up. We've made a new high, a new extreme. We now have a probable 1, 2, 3, and 4. And so we should be, if this is a 1, 2, 3, and 4, then the market is in a position to be in a wave 5. And if there's any decline below this wave 4 extreme, it would indicate that the bull trend up from this low is complete. It's completed a 5-wave trend. So boy, we have some real important piece of information here, recognizing that we're in the 5th section, or I should say we're probably in the 5th section of the advance from the low several weeks before. It looks like at least a couple months before. This was in October. We're already into January. And that's an important piece of information. If we should take out that low, then it would complete this 5-wave advance. Well, let's continue to add some data. So as of the last bar in the chart, more than likely, Tesla has completed a 5-wave trend, a 5-wave advance into a new high. And it's going to have a correction greater in time and price than any correction within this 5-wave advance. And of course, those corrections were pretty small. Just 5 days. This is about 2 weeks sideways or so, but it's still a valuable piece of information to have. Now, we didn't close below the closing lows here. We just traded below it. So we have traded below it. What I would say at this point in time is say, I want to see a lower close. I want to see the market get below or close below the lowest close of this, what I've got labeled a wave 4, that contracting triangle or whatever we're going to call it. Draw the line across here. I'm going to make it thick because it's a close. Going to make it red. So this isn't a rule. Let's call this a guideline of when it's kind of iffy. We only advanced for like a day above this high. If we want to consider all of this the wave 4 low, yes, we've traded below it. Let's close below the low close of this potential wave 4, and that would be in that area there. That's just kind of logical. It says, okay, that confirms that we've completed that top. So, well, there we are. 1 day later, we closed below it. So now we can look at this as a 1 through 5. And we should have a decline greater in time and price than anything since this October low. Now, how does this 5-wave advance fit into the larger time frame? What came before? What may come afterwards? Well, that depends on where within the higher time frame trend this 5-wave advance is. Remember, when we began this example, is we just assumed that this low, in this case it's October 30th, we assumed that that completed a higher time frame low, and we were beginning another 5-wave advance off of that low. We didn't look at the larger time frame. We didn't look at the data before it. So how it fits in, that's for another lesson. But right now, we've probably completed this, and we're going to have a fairly substantial correction. So that's exactly what unfolded. So once again, a lesson here is, as we add each bar in the chart, how does it fit in logically with the potential structure of the chart? And kind of a lesson here is, as a market advances, in this case, in a bull trend, and we have, these are kind of fairly substantial corrections. Not in time, they're only 2 or 3 days, but in price percentage, we'd find that they're reasonable corrections. But what we identified is they were probably of a lesser degree correction than this 5-day 10% plus correction, because these were only 2, in one case 3 days. We needed to see a correction that was of similar degree to this 5-day 10% correction, and it wasn't until we got into this was probably a 7-8 day or more, maybe even a 10-day sideways correction, that we could say that was making a correction of similar degree to this wave 2.